Okay, so I'm trying to do a voiceover outlining what I did with this trade. So let me get into it because I don't know. Um, as you can see, my charts are very colorful, but this is how I track price. This is how I make money, and it works for me. So um, it is now on the chart, as you can see. It's like 9:30, a little around about 9:30. It's about to be 9:30. This represents that we took the London high. So we swept it, came down, swept it again, swept it again. So it's like, but that's just manipulation prior to the 9:30 move. Right here is where I marked out my 1 minute bearish breaker. And um, and I'm saying right here because you probably won't even see this cursor that's moving. You just see what I was doing in real time. Again, this is a voiceover. So I'm trying to remember what I did and why I did it so you can get a sneak peek into the way I set up my trades. So I always start by watching for a higher time frame liquidity pool to be taken. Um, and you want that taken during the during the kill zone or macro times. Sorry about that. Let me mute my phone for a minute. And what you see me doing right now is setting up my 1 minute bearish breaker. Once we take liquidity from a higher time frame point of liquidity, which is like a 1 hour or higher high or low, the equilibrium of a range, like a session range, as well as the CE, consequent encroachment of a 1 hour or above FVG. Those are really my liquidity pools that I look for. Um, I have some other confluences, some other things that I do that helps me know whether to take a trade or not, and I use those. And I'll have to figure out how to explain all that in another video. Nevertheless, price just moved up and made a higher high, so my that long wick coming down is now the new bearish breaker. And I'm waiting. And because it's aligned with the previous breaker, I just kept it right there. It is now 9:30 on the dot, and I see price pushing down. I want to see it close past the breaker. Sometimes I will market execute after I get a close. Now, in this particular candle, I didn't even get confirmation. I kind of got in a little bit too early, and that's sometimes what happens. But I was pretty confident we had swept enough of the buy side liquidity and we were going to come on down. So I was just kind of waiting for that to happen. The turquoise position tool is a long tool, and that was going to be if, in fact, I needed to go long. I like to have my setups already on the screen. I shoot for 200 ticks or 50 handles per trade at 5 contracts, and then I'll let the other 2 or more run. Now that once we confirm this bearish breaker, the next thing I'm looking for is the equilibrium of the session range. That's what you see where it says EQ of NY. That's what the New York range had made at that time. And I always move it as price pushes past those highs and lows. I also have the equilibrium of the London range outlined because that is also a target for price. So when you get your breakers, you want to start figuring out where you may see some resistance and or possible reversals. Price only has 4 functions, and that's to sweep a high or a low, to balance an imbalance like a fair value gap, to equal out a range, which is like a session range or the range of a leg, bearish or bullish, and to generate liquidity. That's when you see a lot of back and forth action, ranging. I call it a barcode. Is generating liquidity for another time. Now, if you notice, we confirmed that 1 minute bearish breaker right at 931. There's a fair value gap aligned with it, which price is now in. And I was getting a little scared, but I wanted to see it play out. Long as we did not get a body close above the breaker high, I was good with it. Another thing I like to do is if we do in fact hit one of those liquidity areas that could cause resistance, if I see a 1 minute breaker form, I call that an inner range breaker, meaning it didn't really sweep a higher time frame liquidity pool, and that breaker could work, but it could not. But I want to know if we're actually just pulling back instead of reversing. And so sometimes you can trade those moves if you know it's going to pull back into a 15-minute fair value gap or back into the range, and there's enough handles for you to get your goal, then you can go ahead and trade those. But that comes with time, practice, and more experience. So for now, I'm trying to keep this as simple as possible. We have a confirmed 1 minute bearish breaker. I also map out the 5 minute breakers, but lately, by the time those 5 minute breakers are confirmed, the move has moved so much. And as you can see, with that little, when I went back, the 5 minute breaker is all the way at the bottom of the range. And when that happens, when your breakers are far away, you want to start looking for change in states of delivery or breakers on the lower time frame. So here we're tanking, we're moving through the equilibrium of the New York range with a lot of speed, but at the same time I'm protecting my profits. So I moved my stop my 5 contracts up a little bit to the new day opening gap, which you see outlined on the chart. All of these things, and I know it's busy and colorful, but it helps me to track price. That's why I'm able to call where price can possibly go. So we just hit the equilibrium of the London range. I'm trying to see how this candle is going to close. And if we get strong momentum to the downside, I'll stay in. However, if I see price rejecting really, really fast up to my entry, I'll cut that trade, because if price wants to come back up and dig in a little more before going down or reverse, I want to secure something now that I've gotten some gains. So as we see, price is moving down further and further. We're now deep into that new day opening gap. I move my take profit there just in case price wants to come back up. I just want to secure something now at this point. And if I get the notion that we're going to continue down, we're closing past the mitigation blocks on the other side of the market maker buy model, because now we're in a market maker sell model. As you can see, we've come up and now we're coming back down. And that's one thing you always want to be aware of. So those 5 contracts were hit, um, and I moved my stop loss to break even in profit just to cover the fees if price comes back up. But I see prices pushing up and rejecting heavily. So you'll see once it does that, you can always add more. If you're pretty confident that price is going to go lower, or past your targets, you can go ahead and you want to add into your winners and manage your risk and losers. You don't want them to pull back too far on you. You don't want to be up $300-400 in profit and then lose those gains. So you definitely want to monitor and manage. For me, my biggest struggle is just leaving my trade alone. I had no reason to move my 5 contracts from the 50 handle mark, really. But again, strange things happen, and it's FOMC morning. So I just want to protect myself. We just made another high, and now I want to see us push down further. We've dug into that bearish FVG, and I see momentum. We're now passing the 75% mark. And once you pass the 75% mark, you can be pretty sure that price will go ahead down to the 100% of that leg. And so I added two more contracts here to really secure the $500 that I wanted to gain off of my five micros at 50 handles. And then I would have two contracts left. And I forgot to move my stop loss down and adjust it by 4 just in case price was to shoot up. You always want to kind of manage your stop losses because you never know what's going to happen. And there go the other two contracts. Now my stop, I'm in stop with, I'm at break even in profit. Um, we have come to the end of this other side of the market maker buy model. So now the market maker sell model is complete, and it's no guarantee that we will continue down at this time. Price can do whatever it wants when it wants. So although your analysis may be spot on, you could definitely be wrong. So I see price pushing down, but then it's pushing up aggressively. We did sweep that low. Now you want to start watching for any reversal signs. And at that point, I said, you know what? Be content with enough. You've made your goal. So I just wanted to round things out. I was waiting to get maybe another $50. And once I got over that mark, I cut it. And that was that. So that was the trade. Now I'm watching price to see what it's going to do. Ideally, I wanted it to take this session low at 657.5, but price started moving up. So now I'm looking on the lower time frames to see, are there any bullish breakers being made? And I found that on the 5 second, we had made a 5 second and I believe 15-second bullish breaker. Price closed over it. It's now tapping back into that fair value gap. That is your unicorn, and it is pushing up. Once we get a close above that very strongly, I knew that I was okay with letting that trade go. And as at that point that I was out of the trade and I didn't even worry about it anymore. We did go on to close out that session low, but we didn't take it 100%. It pushed up and did all kind of other stuff. So as you can see, that bullish breaker was made and the trade was over. So that's the recap. Let me know if you have any questions. Again, I know my charts are busy. They work for me and I can track price that way. So you'll find what works for you, and all the best. All right. Again, leave any comments or questions. I can try to answer them. But that's pretty much what I look for each day. Okay, bye.